a lot of people were deciding to, hey, what do I do? Do I sell? Do I
Yeah.
exit, pass it to my children? And so obviously there's financial decisions and things to think about before making that. I always tell my clients that if you're not measuring it, you can't manage it. So if you're not
Right.
looking at it, you can't do it.
Cash is king, and I understand the value of that for sure. And I think most clients understand the value of that.
This is the Bender CFO Podcast, where we empower business owners to gain financial clarity and maximize growth.
Hello, everyone. Today, I'm joined by Brian Gray, a seasoned fractional CFO with a CPA and an MBA who specializes in helping small to mid-sized distribution and service companies to bring clarity to their numbers and unlock growth. Brian has worked across many different industries, including distribution, services, e-commerce, construction, home services, always wanted to focus on aligning financial strategy with day-to-day operations. He's based in McKinney, Texas. He partners with clients nationwide, delivering trusted financial leadership that helps business owners measure what matters, manage confidence to grow with clarity. So I want to welcome here, Brian. Thanks for joining us today.
Yeah,
How's everything
absolutely.
going?
Good. Thanks for having me. Looking forward to chatting with you.
Yeah. Just as we get started, I just learn a little bit more about your background. Just tell us about who you are and what kind of brought you all the way to the point of having your own fractional CFO firm.
Yeah, great question. So yeah, I've really spent the last 15, 20 years in industry, working for companies primarily in the distribution space. And just with that is built a lot of relationships over those years with small to mid-sized business owners. That just my nature and my line of working for that industry allowed me to build those relationships to help them provide financial clarity for their businesses. And so fast forward 15, 20 years, and I decided, hey, I'd like to do that myself. And so that's what got me into the space of fractional CFO. And it was great transition because I had built a lot of relationships and as their trusted advisor, and it just was a seamless transition for me into this role.
All right. Great. And you tell me specifically, because I feel like when talking with you before, you spent some time specifically working at one company with like a franchise situation. Is that right? Where
Yeah,
they needed guidance or the franchise needed guidance as far as how to run
yes,
their finances.
yeah, that's how it worked. It was a little less of a franchise model, but very similar. And
Oh,
it was an agreement, but the corporation that I was working from, they required financial information from the franchisees or the partners. And
mhm.
a lot of those people did not have that information. And so it was great that a company wanted to see those small business owners be successful in order to help grow their product that they in their distribution of what they were doing. And that's what my role was. Sometimes we'd step in on a kind of financial distress situation where we'd have to work with them and find ways to improve their cash flow, really dig into their financials and see what's happening. But a lot of them,
Mhm.
they focus on what they do well, which was distributing and selling their product. And
Mhm.
so they did not have a lot of time to spend on the financial side of it or didn't really care that much about it. And so that's where we would step in, or I would step in and partner with them to dig into the metrics of what's happening with their business. How can we turn things around? Or maybe things are going great and we need to come up with strategies to grow, or
Mhm.
potentially it's a very generational business. And so a lot of people were deciding to, hey, what do I do? Do I sell? Do I
Yeah.
exit, pass it to my children? And so obviously there's financial decisions and things to think about before making that. And so we'd work through those together.
Yeah. Yeah. That's great. That makes a lot of sense. Yeah. Exiting is whether you exit generationally or you want to sell your company or it could be a lot of ways that you want to exit. You just don't want to spend as much time in the business. I had a conversation with
Right.
somebody last week that basically a single mom that just was spending wanted to get down to maybe 15 hours a week or much less time. And you know what? That's a real common challenge I see. So tell me a little bit more about like where you feel like is it from a business owner perspective where you come alongside and add the most value to them?
Yeah, so I call it, or we've called it historically, what I've heard a lot is managing your business by your checkbook. Whether you are selling a product or you're providing a service, you look in your checkbook and can I order product to sell or not? Do I have enough money to cover that? Or maybe I don't because I've got to pay my team and make payroll this coming Friday. And so that really hinders your business from just a supply chain perspective. And you miss sales often is where I really see the
Mhm.
problem. And so that's where I find I've been able to add the most clarity is to really look into their cash conversion cycle and help them understand, what they need to do, amount of cash they need to set aside, either just to keep their business running on a day-to-day
Right.
basis and product flowing and services being provided. So that's where the most value I've seen really helps them.
Yeah, I've seen a common, obviously, I'm also a fractional CFO, but it's a common
Right.
issue where you're seeing people just use their bank account to make decisions, which is probably the most, it's helpful to
Right.
some degree, but for the most part, it's a dangerous way to manage your business
Right.
because your cash could look artificially high for
Right.
many reasons.
Right.
Taxes, obviously, if you've got inventory, you've got product, that there's so many
Hmm.
different reasons why that's a dangerous way to do that. So I totally understand why that's highly valuable for small businesses to have that insight, that forward-looking view of where their cash is going. So tell me a little bit more about if you see any particular trends that you've come across financially or economically that you might feel like business owners should be watching for.
Yeah, yeah, that's a great question. I go back a little bit to the cash flow and then that conversion cycle and really measuring that. I always tell my clients that if you're not measuring it, you can't manage it. So if you're not
Right.
looking at it, you can't do it. But some trends that I've seen specifically in with distribution companies that I've worked with, and I'm sure it's across the gamut, is just all the tariffs and the surcharges and really helping them understand that while it's new to all of us. It was with the current administration in the White House, it kind of happened overnight and the
Yeah.
businesses are having to adjust. And so it's really understanding that. And do I pass that on to my customer? Is that just a business expense that I need to do to take on? Because that's a part of doing business now. And so those are some of the trends that people don't understand it. It's confusing. And so I've been able to help them guide them through it. But those are some of the things I'm seeing.
Yeah. Yeah. It could be an interesting thing when you're dealing with tariffs and the information or the percentage of the tariff, or it changes regularly. Having the ability to run a few different scenarios, like, well, what would
Right.
happen if this happened, or what would happen if this happened, or then you just have to make an adjustment because, like, I didn't know that was going to happen last week, and then
Right.
just have that model ready to go. Or when you look at cash flow, are you thinking of it more on a weekly standpoint or a monthly standpoint or both, or how are you managing that with your clients?
I've done various ways. Some of them is more of a weekly review, so they're doing it. Some I've gotten down to, I have models built out where we look at it daily. So we
Okay.
forecast out 3, 4 months. It's tough when you get further out that way, that far out. But yeah, at a minimum, I'd say weekly, helping them
Right.
measuring that, understanding, when there are times of when cash is down or in the trough, you've got enough reserve there to run your business.
What's interesting about daily, I haven't really done. I'm trying to remember maybe in the past, a long time ago, if I did daily. Is there a particular reason why daily is helping more than weekly, or something happening at certain days of the week that just throw that
Where I
off?
found that adds one, that's very tedious and time consuming to do. But where it's really helped, where I've seen it, is to getting the businesses and their administrators, they're in the practice of doing it.
Mm.
So doing it every day. Okay, I look at my bank, I look at my upcoming bills, I look at my when my payroll is going to hit. And so it's really more for cash strapped companies that
Yeah.
they're kind of living day to day. And the goal is to help them build that muscle, build that practice into place. And then you can cut back to once you've got some reserves set aside, you can focus more on a weekly or monthly type, quarterly.
Yeah.
So it's
It's
really
so
cool.
much easier when you
Yeah,
have something set aside, or you have some reserves, and
right.
sometimes it feels like the amount of time that the additional amount of time you have to spend when you're strapped it becomes exponential.
Right.
If you have a
Yeah,
reserve, you can now, like I said, you probably don't have to look at, you certainly don't have to look at it daily, and you do get to a point where maybe even monthly is okay. And
right.
now you can reutilize that time for more strategic things, more other highly more valuable tasks. Yeah.
Exactly. Exactly.
So,
Yeah.
so
Yeah.
that that's a big one. So outside of cash, which obviously cash is king, and I understand the value of that for sure. And I think most clients understand the value of it. It's just how do you Hey guys, I've worked with marketing agencies for over 20 years. Have you ever wanted to know some key metrics that you should look for as a marketing agency? Have you ever wanted to understand how to forecast your agency better in the sense where you hit the key metrics, the gross margin, the operating margin, different revenue per person metrics, whatever you would need to be the most successful and hit your goals? To add value. So we have the ultimate guide for financial forecasting for marketing agencies. It's free, really. You just need to click on the QR code, go to the URL, type your name and email, and you can download this free guide. It's not very long, 10 pages, but it gives you some insights that you can find valuable in helping to do a forecast and understand whether you're hitting the metrics you need to hit. So check out this guide. Would love to have a conversation with you if you have more questions. Sometimes it's how to get out of it. But are there
Right.
other pitfalls that you see that businesses run into where they might want to try to avoid?
Yeah. So one is just a good understanding of their financials, of their numbers. Most businesses that I find that I work with, they have someone that does their books for them, whether that be a CPA that does them monthly for their taxes. What I've seen often is they get a set of financials and they don't understand them. And they don't pay attention to them and they set them to the side and they're not focusing on them. That's where I like to add value of helping them really understand things on the balance sheet that to look for. We've talked about cash, their equity position. There's several ways for businesses to structure themselves from tax perspectives and how do you look at that to help benefit that company not only from a tax perspective but also just from a business perspective. And they will take distributions out that maybe they're not looking at. And they may have artificially really strong profits, right, of net income. But if they're not looking at the money that's going out of the bank and out of the equity part of their business, then because they're working hard to, like we talked earlier, for a generational transfer or to sell their business. And if they're not focusing on those things and they're draining out all the equity, they're working hard for it's just a job that they're not building it up so they can do something different with it.
Yeah. Yeah, no, I totally agree with that. And just the whole understanding of the balance sheet is usually a challenge with most business owners, or most business owners didn't, like you have a CPA and an MBA, they didn't go to school in that way. And so you being able to provide that insight is huge, is very valuable. Yeah. So tell me a little bit about, I think I'm a fractional CFO and we have a group of other fractional CFOs that we have collaborated with and put
Mhm.
together. And one of the things that I've discovered from doing this for nearly a decade as a fractional CFO is that there are people with different experiences, different industries. You've talked about distribution, different industry experience. They might have, obviously, people have different rapport, how they work with clients, or different. There are some people in our group that are better or more experienced at raising capital. So it just depends on what the type of fractional CFO, which is I think everybody might think everybody's the same. And some people do bookkeeping and accounting. They do a lot of the
Right.
transactional work and do the
Yeah.
CFO work. And sometimes
Yeah.
people focus on just the FP&A, financial planning analysis, or strategic work. So tell me a little bit how you see yourself working together with other, like, fractional CFOs, or better yet, the question would be like, how does a client know how to hire a fractional CFO? What to look for is
Right.
really. challenge?
Yeah. So, yeah, I think definitely what I've seen and being part of groups that you can collaborate, bounce ideas off of to help provide the expert that will really help that client. As for a client, you really want to focus on somebody that has tenure in that specific line of business, whether that be healthcare or construction or distribution. And so finding somebody, so if you're looking for someone, finding somebody that has a lot of time there or access to resources that can help them get up to speed on their specific industry type. So yeah, you mentioned there are a lot of people that do the bookkeeping and the accounting, and that's great. And we can't do as fractional CFOs our job without that timely and accurate information. But sometimes that's where their expertise stops. And so you really need to find somebody that knows the industry, knows the people to talk to, the things to look out for, the pitfalls to stay away from, and just ways to, because they've spent a lot of time in that specific business.
Yeah. Yeah. That's one of the reasons why there are so many different firms out there. There are large CPA firms are getting into fractional CFO. There's other fractional CFO firms that have many different partners or different members. There's smaller people that are becoming fractional CFO all the time. Different, they
Right.
may have just started in the last year. And then there's nothing wrong with any of that. Obviously, we all have to get started anywhere, but it's what I found is it's helpful to have a community of other
Yes.
fractional CFOs that can
Yeah.
come and help at different times, maybe be able to ask advice. We call it a FCFO group, fractional CFO group
Right.
that meets monthly, talk
Mhm.
through challenges that we have. We have the ability to email or call or Slack or whatever to communicate. When we have an issue, I had an issue recently where I was just trying to find cash financing issues, alternative financing issues for a
Right.
client that was not effectively bankable. They couldn't get a traditional line of credit at this time. And
Yeah.
I got a resource, and we're still working with that resource to find a solution. But it's that kind of stuff that you need a community. And so we have that. I had a situation where I don't have a significant amount of healthcare experience. I'm like, hey, does anybody want to look into that? Or, I talked to
Right.
Brian about that. So
Yeah.
it's just trying to be able to have that community. So we have that with our group. And I think that's
Mhm.
hugely important if it's not already a large firm. Obviously, if you're going with a larger firm, they probably have it in-house. There's pros and cons with that. You just have to
Yeah.
weigh that. Obviously, a larger firm might have less flexibility in some of their processes. They may be more expensive. Sometimes they're more expensive. It just depends. If it's a CPA firm, what I've seen is that unless they have this well siloed, which sometimes they do, the tax season and certain things get in the way. It's having that ability to understand, wait a second. And it's amazing that tax season can be so long because we have
Right.
an issue.
Right.
It's now March. And you
Right.
won't hear from me in March and April. And then all of a sudden it's another deadline in
Right.
September and another deadline in October. And so
Yeah.
it's just having that understanding. And there's nothing wrong with that because you need tax strategies, you need tax people too. And then bookkeeping, the experience of somebody who's a bookkeeper and an accountant is different than an FP&A or CFO person.
Right.
They're all
Yeah.
different roles. And in a large corporation, may have different people wearing all these different hats. What size companies are you working with? Just get that
Yeah,
from a
so
revenue
most of
standpoint.
my clients are between the $5 and $10 million in annual revenue. I have some
Yeah.
that are a little bit bigger than that, but that's where I found that they need a resource, they need some support from a fractional CFO perspective, but they don't
Mhm.
really need one all the time on a daily day basis. I think they'd bring somebody on in that role, and that person would probably get bored, right? And
Yeah.
look for the next challenge. That's the beauty of the fractional CFO model and also just a collaboration. You mentioned the group that we're a part of, that because there's different people that have different skill sets and expertise that you can refer out, and that's invaluable. And not just with their expertise, their history of what they've done, just reporting. For example, I've,
Right.
I've been able to find some resources through this group that is really up to the game in my reporting and focus on presenting stuff to my clients that is actionable and that they know what numbers to focus on. I found a lot of times I would go through my financials and I could tell I was losing interest of the client, of the business owner. But if you've got good, precise reporting that it really makes it a lot more valuable for me and for my clients.
Yeah, yeah, that's great. That's great. I always like to end our conversations with just understanding a little bit more about you personally, what motivates
Yeah.
you, what kind of gets you going, what kind of motivates you in your job as a fractional CFO.
Yeah, really, it's the service side of that. It is really what motivates me. I enjoy helping my clients really understand their business because a lot of them, that's their livelihood and their family's livelihood. And being
Hmm.
able to help them and motive is what motivates me to provide clarity to them because it can be very confusing to a non-accounting type person and daunting of I just don't understand it. It's confusing. And what motivates me is to be able to tell the story in a way that gives them a peace of mind that, okay, if I make these changes, somebody's watching it and I'm able to grow my business and do what I want with it.
Yeah, that's great. Yeah, what helps to how do you define success? So whether it be as a fractional CFO or as you personally, just you can even go personal with this. I always like to
Yeah.
because it's not like it's siloed in this world. It's success is your whole person. So how do you define success?
Yeah, I think success is a strong believer. I think it's be able to relational is how I find success, building strong relationships. And again, just providing a service. We've all been gifted with talents and being able to use those talents in a way that goes beyond just the financials side of
Mhm.
things. That's how I define success is helping them, give them a peace of mind, my clients, and even outside of business, anybody, just helping people from a service perspective in any way with the talents that I've been gifted with.
Yeah, yeah. Yeah, I like that you say as a believer, when you say believer, I'm as a Christian
Yes.
and getting
Yeah.
to know
Yeah.
you, is our role is especially in the financial perspective of things is to be a good help people to be a good steward, right,
Oh,
of the
absolutely. Yes.
resources of the people that they're in charge of. And so these businesses, they're 5, 10, 20 million in revenue. They're not only do you want them to add a lot of value to their customers, but they
Hmm.
also are the livelihoods of their employees and their
Exactly.
contractors and the people that are working for them. And for them
Yeah.
to survive and to grow is it works so much and it has so much of an impact. And so I totally understand what you're saying. And I always feel like we're trying to help them steward and use
Hmm.
our talents to help them the best we can.
Yeah.
And so I totally understand what you're saying there. But hey, Brian, I really enjoyed this conversation. Any kind of last minute
Yeah.
thoughts or anything that you want to share that we didn't get a chance to talk about?
No, I don't think so. Again, I appreciate the time and the opportunity. And so yeah, it's great. What I like about it is having these conversations gives clarity to people that may be in the market looking for things of our type of services
Yeah.
they just don't understand it. Fractional CFO is
Yeah.
thrown out a lot, and just having the opportunity to talk about that and what it really means, I appreciate the time. So
Yeah, yeah. Fractional is such a come more popular, but just understanding, and that's why I like doing this podcast to educate, to help people. Maybe they hear something like, hey, that makes sense now. I really do strongly believe that in companies from 1 to 2 to 30 million, I've heard
right,
people even go higher than that, 50 million. Usually it saves you money. You don't have the wrong person in the wrong role for too many hours. You're not
right.
trying to put somebody here that has to wear 5 different financial hats and they're bored with half of their job, or they're not experienced, so they don't know how to do half of their
Exactly.
job. Either or, and I think that makes a lot of sense to me. And so, Brian, it was a good time speaking with you today, and thank you very much. Appreciate it.
Absolutely. Thank you.
Thanks so much for listening to the Bender CFO podcast. Help us out by subscribing on YouTube so you don't miss another episode, or listen to us on Spotify and rate us 5 stars so more people can get this content to help their businesses grow and be successful.